Hey guys, Chad Trades here. In this video, I want to talk about one of the most important things you need to learn to know how to use to read the trend and ultimately read the market. And what this is learning how to read the market structure on the chart. Okay, this is going to be way more accurate than any indicator, any type of moving average, any type of EMA, because when you know how to read the market structure, you know how to read the trend. You know how to see who's in control. Are buyers in control at this moment, or are sellers in control? And what's cool about this is you can read the market structure on all kinds of different time frames, whether you're more of a swing trader, day trader, scalper. So what I want to do in this video is show you the easiest market structure trading strategy that I personally use in my trading that's very simple to understand. It's very beginner friendly, and I'm going to try to make this as easy as possible for you guys to understand. So that being said, super excited to show this to you guys. This is one of the most important things you need to know to learn how to read the market. Okay, so like I said, we're talking about market structure, and I'm going to be showing you a trading strategy you can use once you learn how to read the market structure. So market structure to me is just reading the market. So if you don't know exactly what it is, this is what reading the market structure is. It's identifying whether we're in a bull trend, a bear trend, or we're ranging, we're just trading sideways, we're more choppy, whatever you want to call it. Now, why is it important to learn how to read the market structure? Right? And it doesn't matter what strategy you're using, it's important for any strategy. Because for example, for me, I only trade with the trend. Okay, so I only trade with the trend. So I'm looking to get in on the pullback. So I define myself as a trend pullback trader. So if I know we're in a bull trend, I can get in on these higher lows, ride it to the next high. I can get in on these higher lows, ride it to next high. Or if we're in a bear trend, I can get in on these lower highs, ride it to lower lows, get in on the lower highs, ride it to lower lows. Now, on the other hand, maybe you're more of a reversal trader, a support and resistance trader. In that case, you can see the market structure and you can be like, okay, we're kind of ranging sideways, we're choppy. Let me get in on the lows and the highs, the lows and the highs. All right, so no matter what kind of trader you are, I think it's very important to learn how to read the market structure, because that's going to tell you what the market's doing, what the current condition of the market is, when to apply your setup and when not to. So for example, when we're ranging sideways, I don't take a trade, right? I only want to trade when we're in that bullish or bearish trend. Now, another thing I like about being able to read the market structure is it's also going to tell you when the trend is changing. For example, let's say we're in a bullish trend, we made this higher high, and then all of a sudden we came all the way down, okay? And then let's say we popped up a little bit, and now we're making a lower high off of this previous high. Right now, it kind of starts to tell me that the trend is starting to go down, right? We're going to start doing something like this and turn into more of a bear trend. So that's another reason why it's important to read the market structure, especially with my setups, because it can also tell me when the trend is starting to change and when to avoid certain trades. So now what we're going to do is we're just going to go into the charts. They're pretty naked. I don't have many indicators. I just have an EMA and a VWAP, and that's it. Okay, I also like to use Heikin-Ashi candles, but it doesn't really matter. Right? It's all about reading the structure. So we're just going to go to random days of the S&P 500. This is one of the things I like to trade. Now, as you can see, before the market even opened, this is the pre-market session, right? What we can notice here is it's a very sideways market. Okay, we can clearly tell that from this picture. We're in this kind of black zone where this tells me to avoid trading. And you can see I even put this on my Discord plan today. If I go over to my trading plan on ES, right, I put currently very sideways candles based on 4-hour time frame. Due to indecisiveness, I'll be waiting until 10:30 Eastern time to see if we get a more clear trend and market structure direction to trade with. Okay, so basically what that means is until we break this pre-market high or one of these highs, the market structure remains sideways, okay? And that's why I wanted to wait the first hour. Now, if we zoom in here, as we can see, as we went over the first hour, first 30 minutes, right, we got above this pre-market high. Then what happens? We pull back to that old resistance and turn into support. Now, what we also notice is not only did we break that level, right, but we're also forming a higher low, right, from our previous low right here. And now if we thought that the trend was continuing to go up since we broke that last high, right, we would get in somewhere right here, wait for a green candle, and then take it to the new highs. You'd have a nice risk reward on this trade. Then what happened here is we started selling off, right? And we broke this previous low. So as soon as we broke this previous low, well, now it tells me we're switching back and the trend is down. And obviously today is kind of a difficult day to read because we're changing all kinds of directions. First we're sideways, then we're bullish for a little bit. Now we're turning bearish. And these are the days that can really ruin people's accounts, right? Because they keep trying to go long. They keep trying to go long. They're stuck in a bullish mentality like, oh, I want to go long. Where if you take a step back, you learn how to read the market structure, you would know that the trend is changing. Okay, so as soon as we broke this low, okay, I know we're going down now. I'm gonna look for pops up to take short. Obviously here, maybe you wanna wait for this level to break since we were at a support level. I typically don't like to go short in a support level, but either way, I mean, this trade would have worked. We take this to the new lows, and now we broke the pre-market low. Let's wait for pops up and see if we can get any, okay? We had one pop up, and as you can see, right now we're having trouble breaking the lows. So now we're going back to, okay, now it looks like a sideways market again. Okay, let's probably avoid trading until we get a more of a clear trend. So you always have to adapt with what the market is doing based on its current structure. Okay, it can change at any moment. We can go back to yesterday. I'm just going to random days in the market, and we can see, we always look at the pre-market first because that's when we first start looking at the market. And pretty sideways here. So in this case, once again, I'd want to wait for us to break the pre-market high, or at least the last pre-market highs. As you can see, we eventually did that. We pulled back. This was news, so it was a more aggressive pullback than we would normally get since it was news. But as you can see, we're still holding this previous structure, right? We still held this low. We're still holding this low. So the bullish structure is still in play. Obviously, I don't like to trade right after news, right before news, so I would have avoided this trade. But as you can see, once we went up, we broke this previous high, indicating buyers are still in control, right? Even with that sell-off, buyers are still in control. We pull back again. What did we notice about this low, right? It held the previous low. It held the previous low. Okay, maybe we take it long here and ride it to the next high. Okay, we got the high. Okay, we got a mini pullback here. Obviously, it held this low, and we can take it to new highs. Okay, now we're pulling back again. What did we notice here? We broke this previous low we had. We're also pretty much lined up with these lows, didn't fully break it yet. But as you can see, we're still holding the main low, right? We're still holding the main low. This is just a deeper pullback to the VWAP area. So we could have took it long here, got stopped out. I actually lost this trade, but I could have took it again and, had a nice winner that would have paid for this loss and put some money in my pocket as well. But this is where it can get a little bit more difficult to read the market when we're breaking these previous lows that we're holding before. Kind of just tells us we're probably going to end up being more choppy. Now, what do we notice here, right? This high did not pass the previous high. So now this tells me we're probably going to start downtrending, right? We're switching over to a bearish trend once again. Okay, and you'll see we'll do this multiple times throughout the day. Some days we'll be in a bullish trend the whole day. Some days we'll be in a bearish trend the whole day. Some days we're just going to be choppy. We're going to be switching, right? And this is why it's important to adapt with the market and being able to read it. Didn't break the previous high. And then obviously we eventually broke this low. Okay, so now we can wait for pops back up. And as long as we don't break, these highs, right, we should continue to go down. Okay, we can go back to the previous day now and we can look at the pre-market. As you can see, we had a nice downtrend in pre-market, basically making lower highs from this last high, made a lower low, kind of opened up sideways. And then what do we notice, right? We traded straight down. All these pops up, we're making lower highs, lower lows, and then we start coming up again. What do we do here? We look at the last high. As long as we don't break this last high, the market structure should still be in a bear trend. So this is actually a trade I took. If we zoom in here, right, it's kind of hard to see because we had so much movement. If we zoom in here, this is where I got in short and I scalped it down a little bit, okay? It was super choppy, so the trade just didn't play out as much as I wanted to. We just kind of lost our volume. But as you can see, we slowly trended down the rest of the day. All these highs, we weren't breaking the previous high, and continued making new lows. Okay, so you can kind of see how we can start using this in our trading with our setups. So whatever setups you're using, whether you're trading with the trend or you're trading more support and resistance, right? We want to look at the market structure to tell us which strategy to trade. And also, very important, when the trend is changing, when we can continue going in the trend, as long as that market structure continues to hold. As you can see, it doesn't have to be super complicated. You can use Fibonacci retracements to help you with this, but it's really just looking at, are we making higher highs, higher lows, lower highs, lower lows, right? You kind of get the point. Now, if this was a little bit confusing to you, and I promise you, if you just practice this and actually, watch the market do this day by day, it'll start to become second nature for you to start reading this. But there are 2 hacks I like to use to make this a little bit easier. Like I said, the first hack I use is a 5-minute EMA and using a 45 length. So basically just looking at the 5-minute EMA, you can see if we're pointing up, then we're probably in a bullish market structure trend. If we're pointing down, we're probably in a bearish market structure trend. And we can see this right here. We're going to go to the same days we just went over. When market first opened, we're kind of flat. We waited till we broke this last market structure, right? We broke it. As you can see, once we pulled back, EMA is still pointing up, right? EMA is still pointing up, broke this high. Now we broke this previous low that we talked about, right? Once we broke the low, what do we notice? The 45 length EMA is pointing down now. It continues to point down. And now, since we're trading sideways, right? We kind of said that on the 2-minute time frame. Now, what do we notice? It's pointing sideways as well, right? So it's a pretty good indicator to tell you what the market structure is. Same thing with this day, pointing up on all these pullbacks we got. Then obviously this was a much deeper pullback. We broke this previous low right here, and now it started pointing down. And especially when this top didn't break the previous high, right, we really started to point down after that. So all these pops up, you could have taken short on the market. And then same thing this day. This is obviously a very strong bearish trend the whole day. Obviously this EMA was pretty much pointing down the entire day. So again, another easy way to read the market structure just looking at this light blue line. Now, another hack I like to use, this is mainly for determining whether you want to trade around the open, is looking at the 4-hour Heikin Ashi pre-market candles, okay? This is actually huge, and you'll see this, okay? So what I'm going to do is I'm going to go back into the charts, and I'm going to go over to a 4-hour time frame. And based on what these candles are doing, it's going to tell us the market structure without having to actually read the higher lows and higher highs, right? It just basically gives us an easier way to read it. As we can see, when market opened today, we can see the pre-market is the gray area, right? What do we notice about these Heikin Ashi candles? Okay, they're all sideways candles. Okay, so when we have wicks on both sides and a small body, this tells us there's indecisiveness. No one's in control. Buyers aren't in control. Sellers aren't in control. Those are indecisive candles. Okay, so this tells me that on the open, I should probably wait for some market structure to form, wait for us to break one of these highs like we did, right? And then wait for some kind of pullback. We can go back to the previous day, right? We can see we had red candles, but as you can see, we started trading sideways. We weren't making any new lows. Like this candle should have broken this previous low. We didn't. We held the support. We had an indecisive candle right here, and then we started trending up. So once again, even on the open on this day, I'd want to wait for an hour or so to wait for the market to develop some structure during that first hour of the market open. Okay, we can go back to this day. As you can see, pre-market had consistent red candles. This last candle, remember these are 4-hour candles, right? This last candle broke the previous low. So we can go into this day knowing that we only want to look for short setups, right? As you can see, if we would have done that, it would have made it a lot easier. Okay, so these red candles are telling us the market structure is in a bear trend, right? And we can zoom out. We can go to pretty much any time of the market. We can see like typically when we have consistent 4-hour Heikin Ashi candles that are green or red, we're going to continue trading in that direction. As you can see, this day started trading sideways, got a nice green candle, continued to go up the rest of the day. So anyways, guys, this is how you read the market structure. I'm going to keep this short and simple. You really don't need to overcomplicate this. It's simple as looking at a pattern and seeing when that pattern breaks. This is not rocket science. You don't have to use any fancy tools or anything like that. So anyways, guys, if you guys feel like you still need more help reading the market structure, I do post my trading plans every single day in my free Discord community. You can see inside of here, I post, currently very sideways candles based on the 4-hour time frame, right? And I kind of show my chart. I also share the same thing with NQ. So I have my NQ plan, and then I also like to trade gold. So we can see gold currently in bullish rotation to test new resistance levels. I'll be looking for pullbacks to take long unless we break below VWAP. You can see what my chart looks like. You can see this was in a bullish market structure, so that's why I'm looking for pullbacks to take long. So again, if this is something you guys struggle with, I think you'll get a lot of value from joining my Discord community. Like I said, it's completely free to join. To viewers of this YouTube channel, we'd love to have you inside. Not only do we have a trading plan, but we also have a big community of all kinds of other traders that you can chat and network with in here as well. Plus, you can also ask me questions in here. So anyways, guys, we'd love to have you inside. If you do want to join, all you have to do is go to the first link in the description below, or just head over to this link right here. That being said, guys, as always, I hope you have a great rest of your trading week. Let me know if you have any questions in the comments. And as always, I will see you guys in my next video with another day trading lesson.